We're taught our whole lives that the harder you work, the more successful you'll be. But what if I told you that in the stock market, well, it's kind of a lie. Today, we're going to talk about the hard work trap and how, weirdly enough, doing less can actually make you more. So, does this sound familiar? You're glued to the screen for hours, you're making more trades than ever before, you're putting in all this effort, but your account is just stuck. Or maybe it's even going down. I'm telling you, you are not alone, and the reason for it is probably the last thing you'd expect. And here's the thing you've got to understand. The stock market isn't like a normal job. You can't just clock in more hours and expect a bigger paycheck. In fact, trying to work harder by just trading more and more can literally sabotage your own success. It's a completely different ballgame. Right, so this brings us to what we call the hard work trap. It's this gut feeling that if you just make one more trade, you'll make more profit. Let's dig into why that is such a costly mistake. Okay, just take a look at this. On one side, you've got the hard worker. This person is grinding, making 10 trades a day, totally stressed out, and just struggling to stay afloat. And on the other side, the smart worker. They're making maybe one, maybe two trades. Their effort is focused, they have a plan, and they're the ones actually aiming for and often getting consistent profit. This quote just nails it, right? This isn't like learning piano where more practice equals better playing. In the market, just doing more can be flat out destructive. The goal isn't to be busy. The goal is to be precise. So why doesn't more effort work? Well, it's because more effort almost always leads to more complexity. We think if we just look at one more indicator, one more piece of data, we'll find the secret. But in trading, that complexity just leads to, well, paralysis. It kills your ability to make a clear, fast decision. Let me show you what I mean. Okay, picture this. You see a perfect setup. The price chart is screaming buy. Your gut says go. But then the hesitation kicks in. Then that little voice in your head starts up. Wait, am I missing something? So you open up the option chain, that massive list of contracts, just to double check. You're adding another layer, trying to be extra smart. And it doesn't stop there. You think, oh, I better check my indicators. So you look at the EMA crossover, then the RSI, then maybe two or three others just to be safe. And now you're just drowning in conflicting signals, looking for a perfect green light that just doesn't exist. And by the time you finally convinced yourself, by the time all your checks finally line up and you go to click the button, poof, the opportunity's gone. The big move happened, and you were sitting on the sidelines. All that hard work just made you miss out. And that delay has a real price tag. While you were overthinking it, a premium can jump from 400 to 450 rupees. That's 50 rupees per share in profit that just evaporated, all because you took an extra 60 seconds to pull the trigger. That money's gone forever. All right, so if overthinking and overcomplicating things is the disease, what's the cure? It's time to talk about the simplicity principle. This is all about getting your edge back by actually doing less, not more. Here it is in a nutshell. The simplicity principle is all about intentionally cutting out the noise. Instead of adding more charts, more news feeds, more rules, you strip it all down to the bare essentials. That's what lets you see what's really happening and act on it with confidence. And the benefits here are huge. I mean, think about it. With a simple process, you make decisions way faster. You're not stressed out trying to balance 10 different signals in your head. You can actually grab those opportunities that disappear in a flash. And best of all, you're much less likely to trip over your own feet and sabotage a good trade. Okay, let's make this real. I want to show you a tale of two trades from two back-to-back days that perfectly shows the difference between a hesitant, complicated approach and a simple, clear one. So on Monday, the analysis was spot on. The selling momentum from the week before was still there. But there was a little hesitation at the entry. The trade was put on just a bit too late, and all it took was a tiny, perfectly normal market bounce to hit the stop loss. A great idea turned into a loss, all because of that moment of indecision. Then came Tuesday. Night and day. The plan was dead simple. The old sellers were out, and the new buyers were the real target. Even though the market looked a little strong at first, the trade was executed without a second thought, based on that one clear idea. And the result? A beautiful downward move was captured for a big profit. No complexity, no hesitation, just clean execution. And this is where it all clicks into place. You have to realize that as a trader, you actually have two completely separate jobs. And if you mix them up, that's when the hard work trap snaps shut on you. You have to know when to be the analyst and when to be the trader.
Think about it like this. You wear two different hats. The analyst hat you wear when the market is closed. That's your time to study, spending 6 hours then poring over charts. That's smart work. But the trader hat, your only job is to execute. Spending 6 hours actively clicking buttons while the market is open, that is a massive mistake. The real work is in the prep, not the participation.
So, what does this look like in practice? Here's your new game plan. 1. Analyze like crazy, but only when the market is closed. That's your homework time. 2. Create a super simple, uncomplicated plan. 3. When that opening bell rings, your only job is to execute. That's it. And 4, this one is critical, once you're done, you stop. Win or lose, plan complete, you walk away. The job is over for the day.
I love this quote because it just says it all. The real hard work, that's the learning, the studying, the understanding that you do behind the scenes. The actual act of placing a trade, that should be the easiest, most automatic part of your entire day because you've already done all the heavy lifting.
So I'll leave you with this final thought. Take a hard look at your own habits. Is your trading process really built for deep thinking and solid preparation, or is it just a frantic cycle of doing? Answering that question honestly might just be the key to everything.